I'd like to talk to you about budget constraints and indifference curves. Specifically, we're going to be using this tool to help us understand the effect of proportional taxes on labor supply. Now, proportional tax is a tax where you have the same marginal tax rate all along. So, for example, if we have a so for example, 40% marginal tax rate. So, first dollar, we're going to assume it's I send 40 cents out of every dollar to the government. I get to keep 60 cents. So let's write that over here. So I'm going to assume, let's see, where's my pen? There it is. I'm going to assume let's actually get a pen. That works a little better. So I'm going to assume my $10 wage. I have a 40% marginal tax rate, so 1 minus zero point 0.4. It's supposed to be a point. It times 10. I get to keep $6. Now, let's draw that over here. I'm going to have income up here. I'm going to have leisure down here. Now let's use my ruler. Let's see if I can get my ruler to work here. Oops, let's try that again. There we go. Control Z works great. Okay, so there we go. Looks like I need to take this a little bit longer, obviously. So leisure, I'm going to have this as my point Y. So if I work all my hours, I'm going to be out here. And this point right here, this point right there. Yeah, I'm going to call it N. So that'll be my N. Now, let's see if I can take that point right there. And I'm going to assume that's equivalent to a 40% tax rate. And let's call this, I don't know, some lower level of income. I'm going to call it Y prime. Could call it Y1 or something like that. So in this case, my tax rate lowers my net income. So before it was $10 an hour. Now it's $6 an hour. Well, notice there's also income and substitution effects when I do that. So my income effect Well, I went from $10 to $6. Well, if I went from $10 to $6, my lower net wage means I need to work more to make up for the lost income. So income effect, work more. I'm going to change colors here because I like different colors. Colorful person I am. Let's change it to red. Or a reddish color. Now let's look at my substitution effect. Substitution effect. The substitution effect means, look, I went from $10 to $6. That means that my opportunity cost, remember my opportunity cost is the value of my next best opportunity. Well, my opportunity cost of leisure was $10 that I would have gotten if I worked. Now, for every hour I take in leisure, I only give up $6 an hour. My opportunity cost when I take leisure time has gone down. Well, that means that I will work less. Now notice I'm assuming in either case the wage went down. If the wage goes down, I work more for the income effect. If my wage goes down, I work less for the substitution effect. If it goes the opposite direction, obviously these go in the opposite direction. So in this case, so $10, $6, what I'd like to do is start out with my original curves. Let's go back to different colors. Or let's actually go back to my original. So let's call this U0. Now I'm going to put red to show afterwards. Now just because, actually I kind of like to let's go with blue. I think blue's kind of a cool color. Okay, now, actually forgot to do one thing, because if we take this point right here and go straight down, we'll have some level of leisure, L0. And if I go to this point right here, this will be when the income effect is equal to the substitution effect. So so I went from $10 to $6. If my working more from my income effect completely balances my working less my substitution effect, so there's no effect from the lower wage, I will be right here. It would be like as if I had a vertical labor supply curve right here. So my wage went down and I work exactly the same amount, and I take exactly the same amount of time as leisure. Well, notice if this is income is equal to substitution effect, let's look at this side over here. Well, this side over here, it looks like, well, leisure time is going up over here. Well, if leisure time goes up, which one has to be bigger? Well, work less means more leisure. So this over here, this side must be the substitution effect dominates. My wage went down, I work less over here. Over here, notice I'm taking less leisure time, but more work. So over here, it must be my income effect dominates. I'm working more. Well, which one should I do? I could go with either one. What I'd like to do now is, let's assume I'm just going to choose one. I'm going to choose leisure time. I'm going to assume I had a lower net wage, I take more leisure time. So I'm going to have a curve that just touches somewhere over here. Let's make it a little smoother. Let's call that U1. Now, at U1, I choose to go to L1 leisure. I take more leisure time. My substitution effect is bigger. We could stop there, but we also can show the effect on deadweight loss of taxation, or the excess burden of the taxation. And the big thing that causes the excess burden of the taxation is the substitution effect. So let's draw a line that just has the same $10 wage, so it's parallel to my original budget constraint, but it just barely touches this one. And I'm going to put this, what color should I use? Let's use a new color. Let's put it in green, shall we? So it's going to be showing just tangent. Let's see if I can pull it off. So what I'm going to do, okay, let's see if I can, just tangent. That's pretty close, but it looks like I need to get down a little bit further. So I'm going to erase all that. Okay. That looks like I could have used a little bit more curvature right here. Let's see if I can make it work. Don't want to go over it. Okay, let's see, let's try one more. Okay, there we go. And actually, let's make it so it's a little smoother, because it was kind of like a straight line there, doesn't it? So I'm going to actually take my eraser a little bit so I can just smooth this out a little bit. Okay, so we'll go to red. So let's see, I want to just make it just, So we'll come down here. Oh, isn't that beautiful? Okay, now let's go with my green. Okay, let's see if I can go back to here. Just barely tangent. Okay, let's make that look a little prettier. Okay, so oh, beautiful. Isn't that? Okay, let's look at some of our points that we just went to. So we started out here at point A, went down here to point B. Now this point looks like what? Tangent right about here, point C. So point B to point C would be kind of a pure substitution effect. So I'm staying on the same indifference curve, but notice what happened here. I can, in fact, a couple things going on here. One thing is, let's look at green again. Let's see if I can get a little greener green. So the vertical distance right here, from right about here up here, this vertical distance is my tax revenue. But notice, this is a little bit bigger. I have a bigger, my budget constraint's lower. The vertical distance right here. So the vertical distance right here is bigger than the vertical distance over here. So this is my tax revenue. And let's in fact draw a new these parallel lines would be like lump sum taxes. I'm going to draw one that's blue. And right here, let's see if I can get it right. Oops, a little bit too far out. There, right about here. So this, I'm trying to make it so it goes right through that point. And so notice I have a slight difference right here. Well, the difference between those two lines, this kind of purplish line is where I have the same tax revenue. So this is the same tax revenue. Just like I did over here. It's the same vertical distance because that's how I drew it. I drew it with the same tax revenue. Well, this line over here is bigger. This put me on the same indifference curve. So the difference between these two lines is, we'll call it DWL. And DWL is equal to the dead weight loss. Now I'm used to calling it deadweight loss. You can also call it an excess burden, a welfare cost. But notice I have a bigger loss than I would have had if I had just a lump sum tax that was just equivalent to the tax revenue generated by this tax. So let's sum up really quickly here. So we're using our budget constraints. First case, we start out with this line out here with our budget, $10 an hour. We had a 40% tax rate, rotated it in, no change over here. We started at point A, we drew a new indifference curve through point B, but then we wanted, and we also mentioned that if I was at this point right here, my income effect is equal to my substitution effect. If I was further to the left over here, my income effect would be greater than my substitution effect. And if I was over here, my income effect would be less than my substitution effect. In other words, my substitution effect dominates over here. Okay, I drew it, so my substitution effect dominated. Then we did our deadweight loss. Well, what did we do with the deadweight loss? We had one line that was parallel to the original budget line, just touched the indifference curve. We had another lump sum tax, or budget line, that was just, and I say lump sum tax because that would be a tax that would bring me down but not change the wage. I still get $10 an hour. And we just had the same tax revenue. The distance between these two is the deadweight loss. Thanks.